Bonjour, Macgregor. How are you doing today?
I'm well, thank you for having me.
Or can I say Mac?
You can, indeed.
Okay, good. Hey, Mac. So it's day two. We're at Sibos 2019, which is unarguably, I think, the biggest, baddest, meanest Sibos ever. More than 10,000 attendees, which is crazy. Of course, it's important for any large financial institutions to be here, and probably Fintech those days. So Wespac is here, right? Could you please give us a quick overview of the main reasons why you are here this year, like any other years, but maybe something any more specific around collaboration, whether with smaller fintech or larger organizations. So why is Westpac here in 2019?
There are a couple of reasons why we like to participate in Sibos. Obviously, it's an opportunity for Westpac to speak and collaborate with other similarly situated banks around the world. And we're increasingly finding an opportunity for large global banks to come together and partner to share CapEx and build out new capabilities which we can utilise within our home markets. But beyond that, it's an opportunity also for us to talk and to promote some of our fintech partners. So Westpac's invested in over 30 portfolio companies within Australia and within Southeast Asia, and a lot of those companies are looking to take some of the experiences that they've got in partnering with Westpac to a broader, more global client base. And Sibos is a terrific opportunity to have those conversations.
It's a great platform to do so, yeah, no pun intended. So that means that you came here in London and you brought a few of those partners over?
Yes, we did, yeah. So I think we've got a handful of those, of the portfolio companies here who are sort of out having conversations themselves. But as we talk to a lot of the global banks, we obviously have an opportunity to talk about some of the partnerships and the collaboration initiatives that we're engaged in, and that's obviously of interest to a lot of banks around the world.
In a context where, again, a lot of global players and more agile players are spending a lot of money, research and development, and try to enter new markets, being a universal bank must be more and more challenging. So could you please talk about the opportunity of leveraging investment with other non-competing banks, maybe all over the world? Because I think it's something you're pursuing at Westpac. Am I correct?
That's exactly right. And as you've suggested, so Westpac is what we call a local universal bank. It's local in the sense that we operate primarily within the Australian and New Zealand markets, but it's universal in that we offer a very broad array of products and services to our customers. So we run some 26 lines of business across the group. But what that means is increasingly we find ourselves competing against global scale providers of products and services. So take payments, for instance. Payments is one of those lines of business that Westpac runs, and yet our competitors today are not just other Australian banks. They're the likes of Stripe and Square and Adyen and PayPal, and these are global companies which are often allocating billions of dollars in R&D and new product development each year. And it's very difficult for a bank like Westpac to allocate that level of resources to remain competitive. And so what we're increasingly finding is that similarly situated global banks around the world are coming together to try to pool CapEx to develop a common capability that we can then each use exclusively within our home markets to compete against some of these global scale providers that we see increasingly moving into our markets.
And again, I think it's a fascinating element behind the ecosystem topic. And would you say that one region of the world has more appetite to partner with organizations like yourself, or you, again, now you see equally amount of desire and appetite and interest from Europe and from Southeast Asia and from the US? Is there one part of the world which is more ripe to do that?
We tend to find that we partner mostly with other developed country banks. So typically in the US, Canada, the United Kingdom, Europe, and then places like Singapore. So we tend to have a similar customer base, a similar sort of mindset as to how we look to run a bank. And so they tend to be the sorts of banks that we look to partner with. I would say, Westpac has a very strong interest in Southeast Asia, but it tends to be we tend to look at Southeast Asia as an opportunity for expansion and to try to deepen the relationships that we have with our Southeast Asian customers, and seeing it as an opportunity to take our Australian customers and to follow our Australian customers into the region, obviously in response to some of the significant growth that we see there. But from a technology perspective, we tend to partner mostly with banks from other developed countries.
Exciting. And Sibos again is a great platform, as you said, to build on those relationships or discover new ones or explore new avenues. So we don't have too much time today, but ideally it would be great to talk about the very concept of universal banking. Is it the right model those days? That's one. Is it sustainable? But let's not go there today. And also the bundling and unbundling of banking, which is of course linked, and all fintech influencers have had those conversations for the last few years, and it's a great topic, but maybe let's not go there. But when you talked about, except if you really wanted to talk about those touchy, feely topics, but in terms of ecosystem, or in terms of, you said maybe banks now, it's going to be more focused on, again, providing great customer experiences, but not so much, not necessarily, about managing every single aspect of, again, the technical elements and everything. So we're talking potentially about a new distribution model of products and services, like potentially aggregation as well, or is it the role you see like a universal bank like Westpac tomorrow or in 2025 to be more that you own the relationship with the customer, the brand, the credibility, the trust, the security, yet you might not be the only, again, supplier or provider of products even to your own clients? Is it the model you think will win actually and will be successful at Westpac?
Yeah, I mean, I think so. I think ultimately any company wants to have a deep relationship with their customers, and that's absolutely primary and paramount. And so that's certainly the case for Westpac. But as I said before, making sure that you have the best offering for your customers, that you're meeting their needs, that you're solving their problems, doesn't necessitate that you be the manufacturer of each and every product. And in fact, what you're looking to do is be more of an orchestrator or a curator, and so that ecosystem mindset becomes increasingly important. And I think we're sort of, I suspect we'll enter a world where banks don't just think about net interest margin. They're also very much focused on sort of service-based revenues, ways in which you can generate money by trying to meet the needs of your customers. And one of the great advantages that a bank has is, as you said, banks are trusted. They have high levels of security, both with respect to money and data, obviously. But beyond that, mobile banking apps have some of the greatest, they have the sort of a deep connection with our customers. They're utilised with a high degree of frequency, and that gives a bank the opportunity to really try to take that relationship and deepen it. Often you'll hear people say, we need to acquire more customers. I think increasingly what banks will say is, well, actually what we need to do is deepen the relationship with our customers. And that means trying to find those additional products and services that can really meet the needs of your customers beyond perhaps just the traditional banking services. And as we said before, that will necessitate that you can find other third-party providers of those services, curate that experience, so that as far as the customer is concerned, it's a sort of a holistic, integrated experience with a single provider.
Again, I think that topic it's interesting. You've been in the business for a long time, and we'd love to talk about your experience in the US, actually, in private equity or in merger and acquisitions. We've been 20 years, just modestly, but 20 years in financial services and technology. We've talked about customer intimacy. We've talked about personalized experiences. We've talked about frictionless banking forever, multi-channel bank, you name it, for so long. Of course, we didn't have access, or the market wasn't as ripe, or We didn't have maybe the regulation in place. We didn't have the API on that scale, especially in Europe with open banking. So now it's there. So maybe it's there actually for banks to take advantage of and to finally make it happen. But those are not not really new objectives or challenges for banks, or objectives, goals for banks. So we're still there. We've been there for a long time. What do you think has changed? And do you think that in 2020, banks can really do that, which is already leverage the gazillion of data they're sitting on, which especially in retail, even more than corporate or commercial, using maybe AI, ML. So this is something you're exploring as well, to be that curator and that supplier of amazing experiences, valuable, triggered, actionable insights, or that's where you see as well a bank like Westpac position itself. And
yeah, absolutely. I mean, to answer the first part of your question, I mean, strategy in some ways doesn't change very quickly. It's easy to come up with abstract concepts, and so, you know, I mean, I think 5 or 10 years ago, we sort of had a good sense of where the world could be headed, and people realized that, you know, banks would become increasingly focused on the customer, increasingly focused on distribution, less about manufacturing, more about curating, more about data analytics and personalized experience and frictionless banking, all the things that you just said. I think a couple of things have changed that's making that increasingly sort of both realistic and inevitable. Obviously, the move of banking towards cloud just gives a degree of power and scalability that we haven't really seen before. Data analytics and machine learning is obviously introducing a lot of new capability. And then people are just getting really good at understanding what sort of customer experience is needed. And so, you know, I think I'll give a couple of examples. In the UK, we've really seen over the last couple of years the likes of Monzo and Starling and Revolut sort of achieve a level of scale which, you know, I think a lot of people would have been surprised at a few years ago. And so, you know, Monzo's now got some 3 million customers. I think Starling's close to 1 million customers. I mean, these are meaningful sized institutions now, and so they're in this migration or transition from being fintechs to legitimately, you know, some meaningfully sized businesses. And so people now need to sort of sit up and say, wow, Monzo, 3 million customers, that's a big big deal. In Australia, we haven't seen the rise of the challenger banks as much. We've had a sort of a fintech phenomenon in Australia known as buy now, pay later, with the likes of Afterpay and Zip, which are sort of Australian equivalents of Klarna. But these have become very, very big companies very quickly. So Afterpay now has 5 million customers. In Australia, Australia only has 25 million people, and so, you know, the fact that within 2 to 3 years a company can have 5 million customers and basically own effectively unsecured credit for the millennial demographic is a huge change within just a handful of years. And so I think what those stories, what those examples illustrate is the power of technology and new customer service models to fundamentally upend the way we think about traditional banking, and that's beginning to happen much more quickly than we would have seen previously. All of a sudden, we've now got these very, very big businesses, that are sort of not really, they're sort of fintech, but they're no longer startups. You know, these are multi-billion dollar companies, and that to me is a sort of a nice illustration of how, you know, the strategy that we've been talking about for a long time is really beginning to manifest itself concretely because of the power of the underlying technologies.
Thank you very much. 2020 is coming, it's tomorrow. It feels that way, at least. Yeah. Any insights on that or views? What's going to be the biggest challenge or biggest trend, maybe, for a bank like Westpac? Biggest goal?
I mean, I think we understand the opportunity, and we know, as we were just discussing, the strategic direction that banks need to head in is, I think, well understood. Mm-hmm. The challenge for large banks is that it's often difficult to make that transition, and there are a couple of reasons why that's the case. The first is that you're operating a very large enterprise with, often tens of millions of customers, and it's hard to experiment in real time with that size customer base. So that's a challenge. Large institutions are often working off legacy technology stacks. It's very expensive to change and develop new capabilities, and so that's a struggle for banks to pivot off those systems. And the third, which is a real challenge, is that the regulatory obligations and the obligations of operating on a social license are very real, and they're, I would say, often more real for a traditional bank with very large customers than for a fintech who's often given a sort of a license to experiment, and so that again is a sort of a real hurdle for a large organisation with that regulatory obligation and oversight, and the capex that's needed to continually meet the demands of the regulator. Often finds a large bank squeezed in between, sort of the obligations, the capex obligations of your regulator, the obligations of a dividend payout ratio, and so in the middle you've just got this sort of this squeezed discretionary capex to be spent on sort of new products and services for your customers. I think that's the big challenge that large banks face.
Thank you very much, Mac. Thank you for your time. I know you've been very busy, and you're going to be busy for the next couple of days at least. So I really appreciate your time, and all the best for Sibos 2019, and see you again in 2020.
Great. Thank you for having me.